Hello and welcome to another episode of the Modern Day Dojo podcast. My name is Larry Kooyman. I am your host for today, and I am excited about today's episode because today we get to talk about how to save you a little bit of money. That's right. Today, I want you to know that your business structure could be costing you thousands of dollars, and I mean thousands of dollars. And we're going to go over what you can do about it today. And this is exciting for me because, man, when I start thinking about how you can be saving a considerable amount of money through just simply setting up your structure, I start thinking about all the great things that you can do with it, how much more freedom you're going to be able to experience just with this. So I hope you sit down, take some notes with this episode because, man, it's going to be good. Now, full disclaimer, because I really have to do this. It's a very important piece of this puzzle. I am not a CPA or a licensed financial advisor. So what you're going to hear in this episode is not tax advice at all. It's strategic insight. Always, and I do stress always, consult your accountant or financial advisor before making any decisions about your business structure or taxes. Extremely important. Remember, talk to the pros. Just saying. And if you don't have an accountant, I cannot stress the importance of getting one. Make sure you have a professional. If you had an accounting degree and you haven't used it in 20 years or whatever, you still need an accountant. If you had straight A's in accounting in high school, that doesn't qualify you. I'm sorry. Don't do it. Seriously, it'll cost you more money. The tax laws change a lot. They change often. So make sure that you are investing in a good accountant. Now, the right accountant, as much as they may cost you, can be a very smart decision for your business because they'll save you so much more than they will cost you. Okay. And the wrong accountant will cost you a lot more. Make sure you choose wisely. So why does this episode energize me so much? I talk to lots of gym owners. And I admire everyone that I talk to that dedicates their life to teaching martial arts, to having a gym, to opening up their doors and opening up to a community to help improve the lives of the people around them. To me, y'all are superheroes. And I believe that if you're working so hard to earn a living, that you need to be setting your structure up in a way that is helping you keep more of those hard-earned dollars. There is, in martial arts, as a martial arts professional, we teach our techniques with such passion and technical prowess that when we look at a technique, we teach it from a fundamental, structural basis. We have to make sure that their structure is good to be able to deliver the output that we want to get the desired outcome. Your business is no different. And this is why I get excited, because we can start really understanding as martial arts professionals how this works with how we run our business. It's the same. It's just a different language that we speak. So we're going to be talking about the structure of your business and how it is good and how it could be costing you thousands of dollars a year, not because you're not working hard. That's it. I don't want you to think that you're not working hard. You're working great. You're working hard. You're changing lives. But it's because the structure is inefficient or it's outdated. And just by understanding the different business entities that you can have, the differences between a sole proprietor, an LLC, a limited liability company, and an S-Corp. There's more, and there's subcategories of each, but we're going to dive into what those are, the pros, the cons, and then we're going to talk about when and why a switch to an S-Corp might be the right move for you. We're going to talk about common deductions that you can take that a lot of people miss. And this is, as a gym owner, I was missing a lot of these for a long time. And when I go back and I look, the money we have flushed down a toilet that we could have been paying somebody, that we could have hired 2 or 3 more staff members, that we could have invested or spent into marketing or updating our equipment. So I want to educate you so you can then take this knowledge and take it back to your accountant, take it back to a financial advisor and ask them, does this make sense? I'm also going to break down a real world example of how your structure affects you and your take home pay, which is important. Okay. So hopefully at the end of this, you will have a good understanding of where you are at and whether or not it makes sense for you to transition to another entity, to a different business structure. And that way you have a clear path forward for lasting impact, building a legacy, and making some more income. Okay. So let's go over business entities and compare them a little bit. Now, the first business entity is a sole proprietor. I talk to many, many school owners that are still operating as a sole proprietor today. I would highly encourage you to consider changing. And one of the reasons why, because as a sole proprietor, there is no separation between you personally and the business. And this puts you in a very delicate position because, for instance, if you own a home or a car or have any assets, if anybody in your gym gets hurt or is nowadays insulted and wants to sue you, they can come after your personal assets. They can take your home. They could take your car. They could bankrupt you personally. And that is a very dangerous place to be when you're working in an environment where you're working with people, where you're working with their children. Setting up your business, having a business structure where you are a sole proprietor is dangerous. If you are in a partnership, that is dangerous because you can have issues where any liability of the business is now your personal liability. In the case of partners, if for some reason, if you have a partnership and it's not under an LLC, it's just a partnership between you and your friend. If your friend takes a line of credit out in the business, say they take a $200,000 line of credit out on the business, and they decide that they wanted to move to Tahiti with a girl that they met on Snapchat, and they take $200,000 and leave, and you're 50-50 partners, well, congratulations, you now owe the bank $100,000. So it really is, you got to be careful with this, not to mention the liability that goes along with all of this almost makes this, and I would say almost because I don't like speaking in absolutes, almost makes this a non-starter as a choice for running your business. This is to me, a bad choice in a business structure for a martial arts school, simply because we're working with people. It's a good choice for a side hustle that doesn't deal with anybody or a brand new startup, because these are sole proprietors are the easiest business entity to set up. It is directly attached to your social security number. So that is a sole proprietor. Now, the benefits of a sole proprietor, you can actually have the ease of use of having a sole proprietorship. You can actually have as the next business entity, which most martial arts schools, and I highly recommend if you're starting off, as an LLC. Now, an LLC can be a single member LLC, or it could be a partnership, a multi-member LLC. A limited liability company gives some of the benefits of a corporation with the ease of running it like a sole proprietorship. This adds a small but significant legal protection for you as the business owner. There's certain criteria that you have to follow. For instance, you can't commingle your accounts. You can't have the business money deposited into your personal account. If you do, that pierces the corporate veil, and then you are pretty much a sole proprietor. So you want to make sure that you're keeping things separate, that you're keeping accurate records of all of your expenses. The thing about being an LLC is that you still pay the 15.3% self-employment tax on all your profit. So if you make $100,000 a year as a limited liability company, you are going to be paying, on top of your income tax, you're going to be paying the $15,300 of self-employment tax on top of that. So that is a pretty hefty sum. Now, This doesn't give you a lot of the tax strategies that you could be using as an S-Corp. However, this does give you a lot of flexibility and safety and a safety net, so that way you are not personally held responsible, personally liable for the business. Somebody sues you, that's why you have a liability insurance that will cover that as a business. So, and then if the business bankrupts, that's it. But your personal assets are not touchable. Your house is safe. Your cars are safe. Your personal assets are all safe as long as you don't commingle accounts. Okay. Why does this make sense for school owners? For brand new school owners, absolutely. This is probably the smartest thing to do. Just set up a single member LLC. Depending on your state, you'll have different franchise excise taxes that you have to pay with an LLC, but it's nominal. In Tennessee here, my franchise excise tax as an LLC was like $300 a year. It wasn't much. Setup for this is very simple. You create articles of corporation, and they're easy to do, easy to manage, gives you protection. You still pay 15.3% self-employment tax on the total profit, but it's very easy to use, especially as a new owner. The next entity is an S-Corp. These are the full-blood S-Corp, S-Corporations. There's C-Corp, but we're not going to focus on the C-Corp because I don't really think it's too relevant for most martial arts gyms. However, the S-Corp gets you the benefits of a C-Corp, but you can also elect as an LLC to file as an S-Corp. So you get the tax savings and the benefits of an S-Corporation with the ease of use of an LLC. And this is where I feel most people should. Now, this is important because if you start your business as an LLC, you have a name and you have an EIN, an employer identification number. Now, that EIN is connected to that LLC. If you start up an S-Corp and you just start up a brand new S-Corp, you have to get a whole new EIN, which means you have to set up new accounts for wholesale accounts and all this stuff. It's a pain in the butt. I recommend highly just filing using an LLC and electing to file as an S-Corp. Talk to your accountant. They'll let you know the filing deadlines for that and the requirements for it. But the great thing about an S-Corp and why it's valuable is that you're going to end up paying yourself a salary, a reasonable salary. And as the S-Corp owner, as a majority shareholder of your S-Corp, you are the one that gets to decide what a reasonable salary is. Now, we'll get into that because I know what you're thinking. I'll just pay myself $1,000. You can't do that. You got to pay yourself a reasonable salary. Okay, reasonable salary. The rest of the income that comes in is passed through, and you take it as distributions. And the distributions are not subject to the 15.3 in self-employment taxes. And that's great because that alone will save you a ton of money. This requires you to set up payroll. Make sure you keep accurate bookkeeping, very accurate bookkeeping. But if you're a business owner, you should be keeping accurate bookkeeping anyways. But this alone could save you $10K a year. So we're going to dive into that. Okay, so hypothetically, if you are a business owner and your gym nets, that means the profit that you earn nets $100,000. Let's say you are an LLC. As an LLC, you make $100K times the 15.3% self-employment tax. This is just self-employment tax. You're going to be paying $15,300 in self-employment tax. Okay? So $15,300 in self-employment tax as an LLC making $100,000 profit. If you were in S-Corp, straight up S-Corp, an LLC filing as an S-Corp, if you gave yourself a reasonable salary, now there's lots of guidelines on this. You can do a market-based compensation comparison. What are people in your field typically being paid? The basic rule of thumb is 30% of your net income. So if you're netting $100,000, a reasonable salary would be 30% of that. So if you said $30,000 was a reasonable salary, because that's the wording that the IRS uses, you must take a reasonable salary. If the market compensation for your position is say 80 grand and you're making 100,000, it's not reasonable for you to take an $80,000 a year salary. So it's reasonable that you would take 30% of that. And then as you grow, you would increase your base salary. So you make $100,000 a year as an S-Corp, you take a $30,000 salary. That $30,000 salary is subject to the 15.3% self-employment tax, which means instead of paying $15,300 in self-employment tax as an LLC, you're only paying $4,590 in self-employment tax. So you take the rest, the $70K, as distributions, which is no self-employment tax. So all of a sudden, just switching, you are saving approximately $10,700 in self-employment taxes alone. That's just self-employment tax. So the question is, if you were an LLC, when does it make sense? At what point, at what profit do I need to be hitting before it makes sense for me to talk to my accountant to say, hey, let's look into filing as an S-Corp to see if it makes sense? It depends on your state. Absolutely depends on your state. I say anywhere between that $40,000, $50,000 range. If you start making $40,000, $50,000 a year in profit, you might want to start looking into it. Just because I believe that the tax savings alone for an S-Corp save you more money. Now, it depends on how much it costs for you to file as an S-Corp, but you want to look into that. That is something for you and your accountant to sit down and have a discussion and run numbers with. Numbers don't lie, okay? And then you can see the tax savings that you get. Let's talk about some additional tax write-offs that some gym owners, I think, fail to take advantage of. Now, there's a lot of advanced tax strategies that you could use. You don't have to use all of them, but you can use a couple of them and then add on more tax savings. So you can use all of these if you qualify for them. But again, check with your accountant to make sure this is accurate. One of the things that I do is, for me, I have a home office. Right now, I'm in one of them. We actually have two home offices. This office is used for video production, obviously doing the podcast, and this is also where I manage all of my schools from. This is my office. It's 100% used for office use, and I write this off. So you have the home office deduction. This is, you take the square footage of your office and divide it by the square footage of your home, and you get a percentage. Say this is 10% of my home, and say the mortgage is $2,000 a month, and that's $24,000 a year times 10%. That's $2,400 in deductions. So as an LLC or as a S-Corp, you can write this off. This is a really good way to use the square footage in your home as a way to alleviate some of your tax burden. Some things you have to be aware of, though, is you have to make sure that everything in your office is an office use, not, hey, I'm using my bedroom as my office space, or hey, I'm going to use my living room and my family room and the kitchen because, hey, we use this for work. It's my office, and write off 50% of your home. I know people that write off a lot more than that. It's probably a little bit questionable, but just saying, I tend to stick by the books, and I think writing off my home office that's 100% used, if I was ever audited and someone wanted to look at it, they would be able to walk in here and say, yes, this is an office. Now, there's some gray areas with this. Make sure you check with your accountant. We don't have offices in our school locations. We have a front desk, but that's not an office, and I need an office to be able to handle delicate stuff. So make sure that you are following the advice of your accountant. If you have kids, yes, you can hire your kids if they're under 18. Well, over 18 is great. But if you have kids that are under 18 and are actually doing things for your business, not if they're a 6-month-old, you can't pay them. I don't know what they're doing. But if you have a young child and you're paying them, you can pay them up to $14,600 per year for real work that they do inside of your gym. Now, this is real work, as in might be cleaning or doing janitorial work. They might be helping you with some office duties. My kids are all over all of our marketing, so we pay them a modeling fee that's comparable with the current rate for marketing. We pay them every single month, and it goes. And so because they're under 18, they don't have any income tax, which is really great. They owe $0 in income taxes, and as a bonus, it's an expense because the business is paying them. So if you are an LLC, you have no payroll taxes, which is great on that, and it's a big tax savings. So you want to make sure that you set this up, everything is in writing, and there's a paper trail. Now, the cool thing about paying your kids, I do have to say, you have to make sure that it's an account that's in your kid's name. You can't just pay your kids and you cash the check. That's not how that works. You need to take it from your business and put it into an account that maybe it's a custodial account and you're the signer on, but it's in their name. So that way you could see the paper trail coming from your account to theirs. And then from there, you could pay any expenses that the kids incur. So if the kids are going to the dentist, if they want to go on vacation, you could do anything. They want certain things, you want to buy them clothes, all that comes out of their account for their living expenses. Okay. And it's a great way to teach your kids about making a living and how to pay bills. Now, if you are an S-Corp, this requires payroll or a family management company. I have an S-Corp, but my family also has an LLC, and there's an agreement between that. It's complicated. This is why you need a financial advisor or a fractional CFO to be able to guide you through this process to make sure you're set up right and you're doing it properly. Why you don't just want to do it yourself. This is a quick way to raise red flags. Okay. Now, if you are able to spend or save $14,600 a year, that's max, that could be a tax savings of $3,200 per year. And if you have multiple kids, you have 2 kids, that's $6,400. I have 2 kids, so that's a $6,400 savings in me, depending on the bracket that you're in. And the last one, there's tons more savings that you can do, mileage, deductions, all these different things, the standard stuff. Any expenses are write-offs. One of the rare write-offs that you don't see too often that you're able to do, but only as an S-Corp. This is why it might make sense for you to switch from an LLC to an S-Corp, is something called the Augusta Rule. Now, the Augusta Rule is a really interesting rule where if I own a home, I am able to rent my home to the S-Corp to be able to use for meetings, for recordings, for anything. And you can do this up to 14 times per year. You can look up going rates in your area for office rentals, for studio rentals. For us, it's a video production studio. You can look up what is the going rate for that space. And typically an average $500 a day, I wouldn't bat an eye at, but I've seen it go as high as $2,500 a day, but you could do that 14 times a year. So if you just say, I'm taking $500 a day, 14 times a year, that's $7,000 in a deduction for you. Now, the business gets to deduct it as $7,000 of an expense, but when you receive it, because it's a contract that you signed with your corporation, with your S-Corp, you pay $0 in taxes on the money that you receive as income. So it's a really great tax savings that you can do, and that's $7,000 just in that one. So this is one of the benefits of being an S-Corp or an LLC, filing as an S-Corp. So if you look at all of these, if you say, okay, as an example, as an S-Corp, if I change from an LLC, a limited liability company, to a limited liability company filing as an S-Corp, I get to keep my same name. I get to keep the EIN number all the same. We just are filing different. We get all the benefits of filing as an S-Corp, but the ease of operations as an LLC. If I profit, hypothetically, $100,000 a year, we're going to go through these tax savings. Profiting $100,000 a year as an S-Corp, the self-employment tax reduction of $10,710, the home office deduction of $2,400, hiring your kids anywhere between $3,200 and $6,400, plus the Augusta Rule of a $7,000 in tax deductions. That is a total of $23,000 to $26,000 plus. That is a lot of money just by structuring your business a little different. This, I believe, is worth a conversation with your accountant. Now, my story is we had an accountant for many years. Great guy, awesome attitude. He played it very safe. I've had many people tell me that your accountant is there to keep you out of jail. They're there to file your taxes. They're not there to save you money. It's incumbent upon you, the business owner, to do the research, to be able to present the data and to ask intelligent questions. Then you can receive answers that are going to say, yes, this would be a tax savings. If your accountant won't do it for you, I highly recommend that you look into a fractional CFO, fractional chief financial officer, or a financial planner to let them know what your future plans are as a business owner. Maybe you want to open up more locations. Maybe you want to put away for retirement. And therein lies even more tax savings. Having a health savings plan where you contribute to a health savings account, contributing to retirement plans, IRAs, 401ks, company matches for your employees. All of those things are going to further decrease your tax burden. And a chief financial officer, a fractional CFO, or a chief wealth officer, just saying, might be able to help you in planning and executing that plan. So the money that you have coming in, you can allocate or you can deduct expenses and keep more of it and then invest that for long-term future growth to build a legacy. Imagine what you can do with an extra $10,000 to $25,000. Imagine the impact that you can have on your employees. Pay them what they're worth. Imagine being able to take a vacation or to be able to put aside money for your retirement. That's amazing. I went 7 years without knowing this information. And then when I go back and I look, I had accountants telling me, you're easily throwing away. The number that they gave us was $16,000 a year. Do the math. The last 7 years, I've been throwing away $16,000 a year for 7 years. Man, that's a lot of money. I think about what I could have done with that. Instead of giving it to Uncle Sam, I could have spent it on marketing. I could have used it to update and increase our training methods and our equipment to give our client experience a much higher benefit. I think as a business owner that the best person in charge of managing your money is you, not the government. And yes, we all need to pay our taxes. Absolutely. I'm 100% on top of that. I think that we need taxes to be able to pay our police or fire. But at the end of the day, as a business owner, you shouldn't be worrying about whether or not you're going to be able to feed your family. You shouldn't be worrying about, hey, do I have enough money to be able to hire another employee, another assistant instructor? Do I have enough money set aside so I can pay my taxes so I don't go in debt? That's a lot of stress to put on your back. I know. I was there, and I would hate for you to do it. My wife and I have spent years educating ourselves on these things and have been speaking to people that are a lot smarter. And one of the things that I can say that is, if you need help in this, if you want direction, let me know. Reach out to me. Reach out in the comments. Direct message me. Let me know, hey, I have an amazing guy who will be able to help you He'll sit down with you and go over your finances and be able to direct you so you can get you to where you need to be and help you save more of your money. He's a really great guy. So reach out to me for that one. People say, what does this have to do with running a martial arts school, the financial intelligence? I think being a modern day dojo is all about financial mastery, to be able to know what to do with your finances. And financial mastery is one of the pillars of the modern day dojo framework. You don't need to work harder. Sometimes you just need to work smarter and be smarter with the structure of your business, because the real flex isn't just how much you make, it's how much you keep. And that is what being a modern day dojo is about, is being able to increase your influence, maximize your impact, and then increase your income so you have the flexibility and the freedom to be able to do what you need to do to make a difference in the lives of the people around you. Take a vacation. You're a superhero. You should be wearing a cape. Go enjoy your family and make sure that you are enjoying the fruits of your labor. So again, I hope this arms you with some information that you can sit down with your accountant, schedule the appointment. And if you don't have an accountant, get one. And if you need one, let me know. I have a guy. I have a team of people. They're amazing and they will help you. And you'll be set up for future and long-term success and building a legacy for you and your family. Make sure that you are contacting your professionals, having a discussion with them. Again, the disclaimer, I am not a CPA or I am not giving you financial advice. This is just some insight as things that have helped me. And I hope they can help you too. Again, please stay tuned for the YouTube channel coming out. I'm building a log of podcasts and shorts and then other really interesting martial arts discussions. I'm excited to launch that soon. And if you want to sit down one-on-one with me and spend a half hour talking about what you need for your business, I would be more than happy to direct message me. I am here to serve you. I look forward to the next episode right here on the Modern Day Dojo podcast.